Hello everyone, welcome to a new video on the topic Assessment under GST. In today's video, we will discuss about the different types of assessment, the concept of assessment and what are its provisions. So from a student point of view, after going through all the academic related activities or all your portions for the examination or after you have completed your syllabus as per the academic requirement, it is important for you to take an assessment. That assessment measures the knowledge of a particular subject. The assessment scores will provide us the details regarding the understanding capacity or the understanding level of a particular student regarding a particular subject. So, under GST, assessment means it is the ascertainment of tax liability of the persons. And this ascertainment of tax liability is measured or concluded based upon the Act as well as the rules. So, based on all these rules and provisions mentioned in the Act, the ascertainment of tax liability of a person is made. So, now we will discuss the concept of assessment under GST and also the different types of assessment along with its provisions. As I already mentioned, it is the ascertainment of tax liability of a person and it is done according to the Act and rules or the provisions mentioned in the Act and rules of GST. So, the directions are received from the board time to time according to other rules and regulations, and they are also need to be observed while determining the tax liability correctly. So all the provisions need to be kept in mind at the time of ascertaining the tax liability of a person. So assessment can be classified into four main categories in purview of GST. Section 55, 59 which deals with self-assessment, Section 60 which deals with provisional assessment, 62 containing provisions related to best judgment assessment, and Section 64 which deals with summary assessment or protective assessment. So now we will see each assessment one by one. Let's start with self-assessment. As the name suggests, it is the assessment or the ascertaining of tax liability by a registered person himself. So in this type of assessment, every registered person make a self-assessment of his output GST payable or his tax payable, his tax liability, and record the same or furnish the same details in the respective monthly or annual return after discharging the aforesaid computed liability. So he himself or she himself makes an analysis or ascertainment of his own or her own tax liability. So this can be known as self-assessment, and it is considered to be one of the most important assessment because this is the base for all the assessments or this is the root cause for all the assessments. Okay. So second type of assessment is regarding provisional assessment. So if in case a particular taxable person is unable to identify or determine the value of goods and services, or if he is unable to determine the tax rate applicable to him, he may request in writing to the proper officer allowing or asking for the permission to allow him for the payment of tax on a provisional basis. So this type of assessment is known as provisional assessment. So here the payment of tax is done on a provisional basis. So now we will see it in detail. This type of assessment clearly describes the action point of the taxable person where if he is unable to determine the value of goods or services or both, or determine the rate of tax applicable on his transaction, then such person can request the proper officer in writing detailing all the reasons for payment of tax on provisional basis. Okay, so after receiving this particular writing or a request from this taxable person, the assessment, the proper officer, he may look into the issue and he may allow the provisional payment or the provisional payment or the payment of tax on a provisional basis only if there is an execution of bond in the prescribed format. It can either be a bond, it can be a bond in the prescribed format along with surety or security as the proper officer may deem fit. So there should be an execution of bond in the prescribed format along with surety or security towards the differential payment. So if this condition is satisfied only, the proper officer allows him to pay the tax on a provisional basis. Okay. So this particular bond or this particular surety is intended to make the taxable person liable for payment of the difference between the amount of tax finally assessed and the amount of tax provisionally assessed. Okay. So the particular taxable person may give a request to the proper officer regarding payment of tax on a provisional basis. So the proper officer agrees to that request only if there is an execution of bond along with a surety or security. So this surety or the bond needs to make sure that the taxable person is liable for the payment of a difference amount, which is the difference between the amount of tax finally assessed and the amount of tax provisionally assessed. Then, after this particular step, further, such proper officer to whom the application is filed, he shall pass an order within 90 days from the date of receipt of such application by allowing the provisional payment at such rate or value as may be specified by him, and within 6 months from the date of order, final assessment should be completed. So, if the condition regarding the execution of bond or surety is satisfied by that particular taxable person, the proper officer can pass an order within 90 days accepting or giving an approval regarding provisional payment of tax, but that particular taxable person need to complete the final assessment within 6 months of that order. Okay. Then this particular period of time or 6 months can be extended by some officers if there are sufficient reasons. The first one is power to extend first 6 months, and that power is vested upon the joint commissioner or the additional commissioner, and the power to extend the further period after 6 months to 4 years. This power is with the commissioner. So if there are sufficient reasons, this period can be extended. Okay. So these are the provisions regarding provisional assessment. So provisional assessment or the payment of tax on a provisional basis is done by a taxable person when a person is unable to determine the value of goods or services, or when that person is unable to determine the rate of tax applicable. Okay. So far we have covered two types of returns. Two types of assessment. First one was self-assessment and second one was a provisional assessment. So before moving to the next type of assessment, we will see what is scrutiny of returns. So once the returns are filed by the taxable person, the returns filed will be scrutinized by the proper officer with the related particulars and evidences that are filed along with the return. So this is done to ensure the correctness of the return, and if in case the proper officer identifies any discrepancies or any issues related to this filing of return, he may ask, the proper officer can ask an explanation to the taxable officer regarding this discrepancy. Okay. So when they are asking the explanation regarding the discrepancy, if the explanation is found acceptable or if the explanation is found reasonable, then the registered person shall be informed accordingly and no further action shall be taken in this regard. Everything will be going in a smooth manner. But if the explanation is found unacceptable or if the taxable person does not give a reply to the proper officer, does not even give a reply, either does not give the reply or the explanation is found unacceptable, then what happens? Then serious actions will be taken by or initiated by the proper officer, including those under section 65 or 66 or 67, or he may proceed to determine the tax and other dues under section 73 or 74. So any of these measures can be taken by the proper officer. Okay. So that is regarding the provisions and rules related to scrutiny of returns. Then coming back to our types of assessment, the third type of assessment is best judgment assessment. So what is this best judgment assessment? This type of assessment comes into picture under two situations, or it is applicable in two situations. First situation is when a taxable person has not filed a return. Second situation is when a person who is liable to get registered under GST has not registered under GST. So, in these two situations, best judgment assessment will be applicable. Okay. So, in best judgment assessment, what is happening is an assessing officer makes an assessment based on his reasoning and using the information or the evidences and other relevant materials available to him. So he will make an assessment or he may assess the tax liability of that particular person based on the best of his judgment. Okay, on the support of these materials and evidences and information. And this assessment will be done without any bias. So this type of assessment is known as best judgment assessment. Okay. So I already mentioned that there are two situations where best judgment assessment is done. First situation was when a taxable person has not filed a return. Okay. So assessment of non-filers, how it is done, we can discuss about that. So if the registered taxable person does not file his return, that means even with a notice, even if he has received a notice and he is not filing a return, if the taxable person is not filing a return, then he will be sent a notice under section 62. And then also he does not file the return, then the proper officer will assess the tax liability to the best of his judgment. Okay. So he will be assessed on the available information available to this particular proper officer. The second situation was when the person who was liable to get registered under GST has not registered himself. So in that particular case, or in the case of filing of valid return, if the taxable person files valid return within 30 days from the above assessment order, then the best judgment assessment order will be withdrawn. So if a particular person who was asked to file the return files the return within a period of 30 days from the above assessment order. Okay, then if he has filed a return, then best judgment assessment order will be withdrawn. And the valid return includes return along with payment of all the due taxes. Okay, so including the late fees or the penalty and interest, everything will be included in that particular amount. Then, second situation is assessment of unregistered person. Okay, so in case of unregistered person who was liable to get registered under GST Act does not do so, what will be the situation? In this situation also, the officer will assess the tax liability for the relevant tax period to the best of his judgment. and he can issue assessment order within 5 years from the due date of the annual return for the year when the tax was not paid. Okay, so that is the main point, that we should not in case of assessment of unregistered persons. So if it is found that he did not register when he was liable to, then demand and recovery for unpaid tax will commence and the penalty for not registering will also apply. So there will be demand and recovery for unpaid tax, as well as there will be penalty for not registering under GST Act. Both these provisions will be applied. So this shows that even the unregistered person will be assessed to keep a check on their eligibility of not registering. Okay, so that is regarding best judgment assessment. Remember, there are two situations. First situation is regarding non-filing of returns, the assessment of non-filers. Then second situation is regarding the assessment of unregistered persons. Okay. Then we have the final type of assessment, which is known as the summary assessment, otherwise known as protective assessment. Okay. So in this type of assessment, if the proper officer finds that a person is liable to pay the tax based on certain evidences, then he may make a summary assessment of the tax liability of such person. Okay, so this is only done after getting permission from the additional commissioner or the joint commissioner. So after getting permission from these authorities, the proper officer who finds that a person is liable to pay tax based on evidences, he may make a summary assessment of the tax liability of such person. Okay, so the main intention or the main aim behind such an assessment is to protect the revenue of the government, and thus it is known as protective assessment. Okay, so this is done when the assessing officer believes that if some delay happens in assessment or in assessing the particular taxable person, and if that particular delay happens, it may affect the interest of the revenue or it may affect the revenue of the government. So if the proper officer feels like that, he can start or he can begin for summary assessment. So remember, this is to protect the interest of the revenue. Okay, so he can pass the summary assessment on the basis of evidence of tax liability. Fine. Then summary assessment means it is a fast track assessment based on the return filed by the assessee. It is completed on a priority basis without the presence of the taxpayer, because the delay in such assessments may lead to loss of revenue. So if the proper officer believes that if such a delay occurs and it may lead to loss of revenue, he will not consult with the taxpayer, or this assessment will not be done in the presence of the taxpayer. Okay, so that is summary assessment. So in this video we have discussed about the meaning of assessment and also the different types of assessment, and one more point regarding scrutiny of returns. So I hope you understood the points and concepts discussed here. Thank you.